Hi, welcome to How Invest. Today we'll be talking to you about ShengSiong, a supermarket chain with a gross profit margin of 30%. So this has been the share price of ShengSiong for the past year. ShengSiong is a supermarket chain which is listed on the Singapore Stock Exchange, which currently have a market cap of $4 billion. So what does ShengSiong do? According to its annual report, it's one of Singapore's largest grocery store that usually located in the heartlands. So this has been a revenue for the past 5 years, as you can see. If you do not include the spike in 2020 due to the COVID-19 pandemic for its revenue and net income, from 2021 to 2024, it has been increasing steadily. Its gross profit has also been increasing, and obviously its gross profit margin has also been increasing from 27.4% all the way up to 30.5%. For a grocery chain, this is very impressive. This is from the third quarter report, its latest report. As you can see, revenue has went up by 14.4%. This is mainly due to the opening of new stores and how its company has been improving its margins, and also its net profit has increased by 12% year-on-year change to about $43.8 million for its third quarter, and its net profit margin has remained at about 10.5%. It decreased a bit, but not by much. So now let me show you about why ShengSiong is such a good supermarket chain. It comes in third place at about 86 stores, and with second place being 89 stores, and obviously the Singapore government operated supermarket chain FairPrice having 164 stores. This number of stores for 86 stores in Singapore is a very impressive number due to Singapore limited land space and also limited number of housing estates it can form in, which ShengSiong mostly targeted. So now let me talk to you about how ShengSiong has been increasing its profit margin and how I think they do it. Firstly, they have about 1,750 house brand products, which is basically there's house brand products usually have a higher profit margin when retail and grocery sells them. They're under 25 brands. I'm sure many of you have seen these brands before. I myself purchased a lot of these as they're usually on the cheaper price, and their quality do not far off from its main brand product. Also, one thing good about ShengSiong, which I really like, is how it takes care of its staff, which for a company is very important. As you can see here, during the COVID-19 pandemic, ShengSiong staff received up to 16-month bonus. During normal times, they do pay themselves decently well. However, for every company, there are weaknesses. One such weakness is online retailer about how ShengSiong has been placed in them compared to them. ShengSiong online retail business only makes about 1% of its total earning, which is very little compared to many other supermarket chains overseas. Also, Amazon recently has been making plans to expand into the supermarket business in Singapore. As seen here by the news, Amazon has been launching its whole food products, and also plan to increase their revenue, and also try expand their market for Singapore supermarket, take a bit of market share. This from the news, just by googling it. On top of this, there's also many types of new supermarket chains such as Don Don Donki. I'm sure many Singaporeans have seen it. It's currently only a dozen chain, but many people have already shopped in it. It's planning to open up to 20. Even though ShengSiong is still on the more budget and budget friendly side, Don Donki can take up market share from its higher spending consumers, those who want more niche and interesting products may flock to Don Don Donki to buy them from. Okay, and lastly, the third weaknesses I feel that ShengSiong really face is the rising labor wage. As in the end, ShengSiong is a supermarket chain, and majority of their costs also come from labor. As you can see here, in 2025, real median household income will risen by 4.3%. ShengSiong most probably also pay their workers similar to how the retail other chains pay, and they also will rise their pay as according to most probably the median. So as you can see, 4.3%. This will eat up into its gross profit margin, and in the end may affect its net profit. Now I'll go through about what are some possible growth stories for ShengSiong. As you can see here, ShengSiong since 2011 has managed to increase from its outlets from 25 all the way to 85 outlets in Singapore. Let me show you what I saw from the first half report of 2025. As you can see here, let me quote, 7.1% of year-on-year growth driven by new store sales with gross profit margin improving. 5 new stores opened in the first half of 2025 with 3 additional new stores opening in the third quarter. These 5 new stores have more or less equated to 7.1% year-on-year growth. From that, we can tell that ShengSiong mostly get their earning growth from store count growth and also improving margins. But there's only so much margin you can improve unless they include robotics and maybe one day machines to do all the work, and that's how they can improve margins. But for now, they're still an everyday retailer. As you can see here, I asked ChatGPT to make me a chart. As you can see, revenue growth is 14.1% for 11 new stores. That's about 1.3% growth per store. So for every one store, we can count maybe ShengSiong will improve its income by 1 store. And then you can see here, ShengSiong in the end plan to add about 3 new stores per year for the next 10 to 15 years. This is from one of the annual reports I read through. Yeah. And lastly, I'd like to go through about dividends. The majority of people also buy ShengSiong due to its consistent dividend payout. As you can see here, this from the past 5 years, it has been constantly paying out at a good rate. However, since to the recent rally of its share price, its dividend yield has decreased from about 4%, 3% to only about 2%. But its dividend per share has still remained steadily, not increased by much, but it's remained around there. Yeah, 6 cent mark. So my final thoughts on ShengSiong share is the growth story from ShengSiong is sadly not good, as management had already mentioned that it plans to increase its store count by only about 3 stores per year, and then from our own calculations we can estimate is at best case scenario is about 1.3% store growth per store growth for revenue. And then obviously with a huge number of stores, one additional store wouldn't make such a big impact. But secondly, for resilience wise, ShengSiong resilience is amazing. As during COVID-19 pandemic, while many companies were suffering, ShengSiong saw a surge in revenue and income. Of course, it's due to also due to the CDC vouchers that the government provide, but also people will try to cut costs during recessions and pandemics, and what do? They try to shop, and then they tighten their budget, and they're more budget. And ShengSiong is very budget friendly. Hence, most people will shop there, and hence leading to higher revenue and income. One thing, and lastly, my last point about ShengSiong is company and management strength is really high. As firstly, the company have been trying to look after the shareholders by improving shop profit margins, and it hasn't been making any rash purchases or acquisitions. And also, its management take care of its workers, which is one thing I look for in the company if I want it to grow long term. And lastly, for me, will I buy the share price? As of now, I rate it 6 out of 10. I will not buy a share price. I'll only buy the share price if the share drop due to unforeseen circumstances that will not affect the future outlook of this company earnings because of its current share price and its low growth rate. Personally, I will not buy ShengSiong.